Tedeschi Wealth Management Advisor over at Perspective Wealth Planning with this week's market breakdown video. We're going to be taking a look at the four major U.S. indexes. We are also going to take a look in at oil and gold. We are also going to take a look at some different breadth readings and discuss how strong the Nasdaq has been against the rest of the overall market and what that could mean for us moving forward. If you like this content, please subscribe to our channel so that you can see this on a weekly basis. Let's jump right into it here. First and foremost, let's talk about the S&P 500. Now, what we have had here over the last couple of weeks is a potential island reversal. Now, what that means is an island reversal pattern takes place when you have a gap up into a number of price candles and then a gap back down. So it's left stuck on its own island with no other price surrounding it. This tends to happen at turning points. The last time you had an island reversal here would have been on that pullback in late March, where you see we have the island and then it breaks above it and it continues to head higher. So that doesn't mean that we're going to roll over and break down, but this is a major concern, especially from where it happened. It happened right at that key 3,200 level that we've been talking about here as a major resistance zone over the last few months. And the price action that we've had since then has not necessarily been great. We're setting up in a little potential flag, and we're testing kind of the bottom portion of that right now. So you have got a potential island reversal and then this flag, which if it breaks lower would be bad for the overall market. We'd be looking back towards that 2,700 level if we were to break underneath of this major support zone. So the action has not necessarily been great, and the headlines have not been fantastic here over the last week. A lot of concerns over the increase cases of the coronavirus. So we've got that going on, some China trade tensions as well. And this is after that major historic run up. So what happens here is really, really important on a technical basis. We have to watch this support zone, but really if we take out June's lows, we're really looking at kind of that next support back around that 2,700 level. And the rest of the indexes look very, very similar. Take a look at the Dow Jones. Look where the island reversal pattern took place here, right at that major resistance zone of 27,000. We talked about that a number of times, the importance of that level. And of course, we subsequently have pulled back down. And if we look at this, we're once again kind of fighting near that support zone at 25,000. Underneath of that, we'd be looking back for a move back to 23,000. All right. So that is a little bit concerning there as well. We take a look in the Russell. The Russell, of course, has seen the 50s as the important 1550, 1450, and then we have 1350 as that next level of support. Pretty much every 100 points off of the 50s has been very important here for the Russell, and we are once again back down into that zone. So we popped all the way back up and made a potential double top at that 1550 level, and it headed back down. So the really important here, what happens over the next week or so at that major support level. Now, let's take a look at the Nasdaq. The Nasdaq has been the clear leader, and we are still trading above our February highs. So when we look at what the Nasdaq itself has been doing, it becomes much harder to be super concerned with everything else because the leadership is still holding up very well in comparison. It's above that major previous resistance zone, right? It's holding up nicely. And the day that we had that kind of ugly action 2 weeks ago, it immediately was bought up and headed back up towards those highs. It made a new all-time high 2 days ago. So it's very hard to get really, really concerned when you look at the leadership of this market, and it's making new all-time highs. Just a couple of days ago. So really what we're watching for on the NASDAQ is this zone of support to continue to hold. And as long as it does, the concerns for the overall market are a lot less. If you were to break underneath of that, I would start getting a bit concerned because leadership would no longer be leading. And for us to get back under there, all the other indexes would most likely be under those key levels that we just talked about. And it would not be a good look here as we head into the third quarter. When we talk about the NASDAQ and its strength, we can really take a look. Number of positive closes in the past 22 sessions. And this was as of 2 days ago. 19 out of the past 22 sessions, the Nasdaq has been up. So not only when we look at it just from an all-time high perspective, but when we look at it for how strong this rally has been in the Nasdaq, it is up there with some of the strongest of all time. This chart goes all the way back to the 1970s, and you can see only a handful of times you're at that 19 out of 22. Now, what does that data set look like in terms of positive future look? Well, when we look at the actual prints there, a year later, it's positive 67% of the time. 6 months later, it's positive 50% of the time. In the short term, at 3 months, we're only positive 17% of the time, very skewed negatively. And in the shorter term, 1 week all the way up to a month, we're positive about 2/3 of the time. Now, what that's saying is, really, when you think about it, a very, very strong move eventually is going to have that short-term pullback, and you can see that happen. When we look at all of these charts right here, pull up, pull back, and then continues higher. Pulls back, continues higher. Pulls back, continues higher. Pulls back, continues higher. So it's not necessarily a bad thing for the long run, but it is basically saying in the short term, things might be getting a little bit frothy, and we might really want to pay attention there. Now, what I really want to take a look at also when we talk about the NASDAQ is how much of the NASDAQ is actually participating in this historic run. Well, if we look at the percentage of the NASDAQ composite index stocks that are above their 200-day moving average, we're actually not even at 50%, while the NASDAQ is at all-time highs. And this goes back to something we've talked about a lot here over the last couple of months, and that is the unbelievable heavy weighting of the top 5 names inside of the NASDAQ are accounting for the lion's share of the gains. And this really shows us that. We kind of have a bit of a divergence that's built in here. We had a higher percentage in the beginning of the year, price making highs here, while less names are necessarily participating in it, showing once again the bigger names are continuing to get stronger, while the overall health of the index as a whole is not nearly as good as it looks when you just look at a chart of the NASDAQ Composite Index due to the heavy weighting of the top stocks. This is something we will continue to pay attention to because it's very important when we think about breadth that we have a broad-based, all of the names kind of participating together, making sure that all of those moves higher are happening, confirming that. Now, what I want to jump into next is I want to take a look at oil and gold as well here because they're at key levels, and these are two commodities that have a big impact here for the overall global economy and safety. When we take a look at our oil chart, these are the lines that we've had drawn for a while. We've talked about this many times. When it broke over that 35, we said take a look for that move up to about that 42 zone, that gap. This gap from that sell-off is going to act as a level of resistance. And sure enough, earlier this week, we hit that level and we subsequently sold off sharply. Oil hit almost $42 a barrel and then fell all the way back to 37 in short order. What happens here is really important. We do still at this point in time have a series of higher lows. So really the concern becomes if we take out these lows here at 35, then you would have a lower low and that would break that uptrend. As of right now, this is just acting as resistance and we still have higher lows. So oil still could technically be bullish when we take a look at it from that. It's got to hold 35 and we would look for a move back above 42.50. If we get back up there, our next target's really at about that 50 zone. If we get below 35, we'd really be looking back around that 30.28 level in on oil. Now, the next thing I wanted to take a look at was gold. Gold really hit an important level, right at an important level here this week, and subsequently has pulled back down from it. When we go back and we look at the chart, this is a monthly chart now of gold, we go back to 2013. The highest close in 2013 was 1774 on a monthly basis. So 1773, actually. That's about right where we're trading right now. That big round psychological number, 1800, has yet to be cracked. We pushed up to 1796 earlier this week before turning back down. This is a very, very important level. A monthly close over 1773.5 would be the highest monthly close in a decade almost, and would be a very positive sign for the metals. However, if we were to fail right here at this 1800 and start to head back down, that would not be a good area subsequently to fail. And so when we look at this on a long-term chart, gold bulls really want to see it push higher here. And if not, we could technically come back if this is going to be a short-term resistance top kind of put in here. That really next level of support in on gold really comes back around that 1600 level. If we do break over 1800, I would expect us to test those all-time highs of that 1923 at some point in the next few months. But this is a very key level to pay attention to. So what happens here is important. And as always, we'll continue to take a look at for you. As always, guys, if you have any questions and you want to reach out to me directly, I love to talk markets, love to go over anything in these videos or any questions that you might have. You can reach out at mtedeschi@perspectivewealthplanning.com, or you can give me a call at 814-580-9881.